Muted reaction from the street today to Apple's 16e iPhone announcement. The new, cheaper offering is going to be available to run AI, Apple says. And joining us now is Laura Martin. She is Needham Senior Entertainment and Internet Analyst, has a buy rating on Apple. Laura, this is interesting to me, and I think there might be some opportunity for investors to think strategically here. Tell me what you think. I covered Apple for a long time, starting about 25 years ago. This decision they've made on the 16e is they want Apple Intelligence to be broadly available. They're putting the latest generation chip in one of their cheapest phones now and differentiating on camera. How do you take that strategy-wise?
Well, first of all, I think it's a price increase because remember the one it's replacing is that SE, which was last updated in 22. That was $450. This low-end iPhone is $600. So well below it is the lowest cost iPhone, but it's $150 more, which is like 30% more than the phone it's replacing. So that's interesting. Secondly, I think they're bringing a lot more components in-house. To your point about Apple Intelligence, it's not only using its own chipset, right, the same chips that are in the rest of the 16 series for Apple, but it's also using its own modem chip. So that's interesting. So its margins are higher because it's paying less out to third parties, and the price is $150 higher than the end it's repricing. So better economics here all the way around, it seems to me.
Right. That's why I said one of their lower cost phones, not their lowest, because we don't know what they'll do with the full lineup, especially because they've got some pricing pressure overseas, I imagine, with a strong dollar and whatnot. But what does it say about Apple's likely desire to push that Apple Intelligence capability within the next 2 to 3 years to their whole line of phones? And perhaps, what does that say about services and AI in services as a potential continuing revenue stream?
I got to tell you, I think in this kind of stuff, Apple is trying to keep up with Google, right? Because Google Android has that huge large language model that's captive. So it's doing a lot with its Android phones, a lot faster than Apple. And I think Apple is trying to keep up, actually. I don't think Apple's ahead here. It's behind. So I think everything going forward for all iPhones has to have large language model access. It has to have AI. I do not think this is Apple getting ahead. I think it's trying to keep up with its primary competitor over here at Android.
So does that mean that you would be buying Alphabet over Apple right now? And how much does something like DeepSeek factor into all of this?
Yeah, DeepSeek's a thing. We've had a number of companies report over the last 3 weeks in tech, in ad tech specifically. They're all moving their large language models to, a lot of them were at OpenAI because it was first, which is the Microsoft-like variation, over to DeepSeek because it's so much cheaper. So I think that's an interesting question. The bigger question is, does it hurt Meta? Because Meta's the open source competitor to DeepSeek, but DeepSeek's just a lot less expensive, so DeepSeek says. So it asserts. So that's interesting if there's only going to be one winner of the open source large language models. Is it DeepSeek? Because they're in the market today with quite a bit less expensive product than any of the U.S. large language models.
Meta had this record run, I think 20 trading sessions, trading at record highs, and a lot of that bid caught in the midst of the DeepSeek shakeout. Have you been, I realize it finished lower today and yesterday, but have you been surprised to see the move that we have seen in Meta? And if so, does it change your call on the stock?
You know, I have been surprised because I think the fundamentals imply Meta's adding a lot of costs much faster than his revenue growth. He's actually projecting decelerating revenue growth, accelerating expenses and capital spending. So the fundamentals feel very poorly positioned there. But boy, the sentiment here is really hard to fight. So the sentiment in the stock and its charts look really strong. So we'll see. Sometimes, you know, sentiment corrects sometimes when fundamentals catch up. We'll see, though.
What do you make of what's happened to the trade desk over the last few days?
Oh, my gosh. So Trade Desk down 30% on its earnings, continuing to sort of. So the problem is that it traded at a massive premium to the other ad tech stocks. And when the CEO, who's the founder and worth $6 billion himself in these shares, when he came out and said, oh, we missed the quarter, but we'll never do it again, he then listed 15 things they're going to fix in 2025. So people think, well, if it was a one-off, why are there 15 things to fix? So that was a good question he sort of left everyone with. So, I mean, I think this is a guy that's a good listener. He's founded this company. My gut feel is his bench isn't deep enough. That some of it, and he said this, his employees that founded the company with him, he has very excellent longevity records, that they aren't qualified to run a company that's become as big as him. He has $12 billion of revenue that go over his platform, and he keeps about $2 billion. Some of the people that came were working on much smaller businesses. So probably he needs to replace some people, and that's always hard for a founder CEO to do, which means he needs to hire a chief operating officer who's a little meaner, I guess, next.